Welcome to Matters Financial and Geopolitical from the Frontier. I trust the week's gone well. It's been extraordinary, hasn't it? Let me start with some of the big events. Holger again, the VVIX, that's the volatility index based on the VIX, which is the volatility index. So it's volatility on volatility. Shows the whole drama, and indeed it does. Again, let me go back to 2014 when I sort of saw a premonition of what was coming. And I said, picking up the signal through the noise of our world in 2014 is no easy thing. And I said, I thought that the new normal was a very arrhythmic world. And I was referring to the markets in case that wasn't clear when I said it. China's government intervened to boost the stock market Thursday, according to people familiar with the matter, wants the market to stabilize ahead of a September the 3rd military parade celebrating the World War II victory over Japan, said the people who asked not to be identified because the move wasn't publicly announced. The government bought blue chips, according to one of the people. A gauge of 50-day volatility on the Shanghai Composite surged to its highest level since 1997 this week, amid signs the government had pulled back from rescue measures to support the world's second largest stock market. Citigroup is saying China will respond too late to avoid a recession, saying China is sliding to recession and the leadership will not act quickly enough to avoid a major slowdown. This is Citigroup's top economist William Buter, who was previously the Bank of England. Despite the economy crying out for it, the Chinese leadership is not ready for this. It's an economy that's sliding into recession. And I agree with him. Premier Li Keqiang is seeking to defend a 7% economic growth goal at a time when concern over slowing demand in China is fueling volatility in the global markets. And this is where I agree with him. The true rate of expansion is probably something closer to 4.5%. or less. They will respond, but they will respond too late to avoid a recession. The boom and bust in the Shanghai Composite Index, which more than doubled in about a year before a sell-off erased $5 trillion in market value in 2 months, is raising questions about the competence of the Chinese authorities as managers of the macroeconomy, and that's another important point. Saying the authorities first cheered the stock market rally because quite a few of the local pundits believed that this was a great of deleveraging way without paying for the corporate sector to have a stock market bubble. And then, of course, the rather panic and incompetent reaction ensued in response, he said. The Shanghai Composite closed 4.8% higher today at 3,232. I wrote about China and how it had roiled the world markets over the weekend, and I was a bit tongue-in-cheek quoting an IMF official who said it's totally premature to speak of a crisis in China. I think, and I wrote about this, I said the further problem is that no one believes the data. This moment when the market stops suspending its disbelief is seriously a dangerous one for policymakers, in my experience. Stock market crash, this is on the 6th of July, I said represents probably the biggest political risk to the neo-totalitarian Xi Jinping. Home thoughts, let me start with a tweet I found from Quartz. A Kenyan won the gold medal in the javelin. First time a Kenyan has won any of the field events after learning how to throw on YouTube. And what a wonderful photograph it is. I went back to Salman Rushdie for some home thoughts today. Let me share them. A poet's work to name the unnameable, to point at frauds, to take sides, start arguments, shape the world, and stop it from going to sleep. Free societies are societies in motion, and with motion comes tension, dissent, friction. Free people strike sparks, and those sparks are the best evidence of freedom's existence. And I like this particularly. Our lives disconnect and reconnect. We move on, and later we may again touch one another, again bounce away. This is the felt shape of a human life, neither simply linear, nor wholly disjunctive, nor endlessly bifurcating, but rather this bouncy castle sequence of bumpings into and tumblings apart. Very powerful. Political reflections. I do love following the DPRK news service because they're just extraordinary. They really are. I mean, it's a tough mission. It has to be very hyperbolic. Blossoms fade and die, yet love is eternal for Supreme Leader Kim Jong-un, they tweeted. North Korean leader dismissed top officials after standoff eases. Has dismissed top officials in the wake of a recent standoff with South Korea, a move that suggests the young leader holds them responsible for allowing the confrontation to nearly spin out of control. The two Koreas earlier this week threatened strikes against each other before agreeing on measures to reduce animosity. The standoff began after landmines that Seoul says the North planted maimed two South Korean soldiers. Seoul responded by resuming propaganda broadcasts, and if you saw some of those images, they were really extraordinary. The banks of speakers they had put on the DMZ. Saying Kim also dismissed an unspecified number of members of the party's Central Military Commission. South Korea switched off its loudspeakers Tuesday after North Korea expressed regret that the South Korean soldiers were injured by the mine explosion. The vague agreement allows Pyongyang to continue denying it laid the mines, and Seoul to claim that the term regret signals an apology. So there we go. My conclusions are they do ratchet it up. You do wonder if there's not some kind of cash flowing back and forth in order to calm things down. DPRK, again the Twitter handle, Workers' Party Secretariat proclaims that all abhorrent and venomous backstabbers on the right will be purged in blood. And then Information Minister Roy Tae-woo arrested and sentenced to death by hanging for insufficient revolutionary enthusiasm. That's a brutal charge, isn't it? Put up a photograph of him in his war room, Kim Jong-un, and then a photograph of Shinobu Tsukasa, the boss of Japan's largest Yakuza gang, the Yamaguchi Gumi, getting into a car after arriving at the train station in Kobe. That was in 2011. Reports in Japan suggest his mafia group is splitting, raising fears of a gang war. International markets. The US economy grew faster than initially thought in the second quarter on solid domestic demand. GDP expanded at a 3.7% annual pace instead of the 2.3% reported last month, so much stronger than expected. Jamie at Reuters, US second quarter GDP estimate at 3.7%. Higher than all 74 forecasts in Reuters' poll of economists. That's interesting. And he makes this point, Jamie, again, US exports to China is less than 1% of US GDP. So hard to see how even a 5% Chinese growth would have significant impact on ongoing US expansion. He's quoting Deutsche Bank. Holger, US stocks closed sharply higher for second day in a row. The GDP number obviously gave that a boost as well, rallied 370 points. I'll put up his chart. Eric Hunsader, 30 Dow Jones stocks that open on flash crash Monday, each dot as a trade, and he's also put an Apple. Look at what Apple did on that Monday. Currency markets, 112.87 euro dollar. It had popped through 113. Dollar index around the 95.70 level. Japanese yen 120.87. Swiss franc 0.9628, and they skirted a recession. We've learned today the pound 154.08. Aussie, which has been on a bounce, 0.7169, but it's coming back down. India rupee 66.115, South Korean won 1172.53, the Rial 355.23, Egyptian pound 783.05, and the Rand 1315.94. Dollar index, I'll put up a 1 month chart, and as I was saying previously, quite bifurcated, very strong against the commodity currencies, for example. Euro dollar, let me put up a 1 month chart, and you'll see we got up to 117 on that squeeze. Holger again, there is life even with a strong currency. Recession averted. Switzerland plus 0.2% in quarter two versus minus 0.1% expected, despite what was an awesomely strong Swiss franc. The Share a Coke campaign, which was quite interesting because it came up on my feed so often. So it's interesting to rate. Generated 250,000 tweets and close to 1 billion impressions. Commodity market Zero Hedge has published the best and worst performing commodities of 2015. This is via Citibank, and it makes interesting reading. Gold, last trading at 1128.50, rejected that 1150 level I'd spoken about previously. Now the big story in the last 24 hours was in crude oil, surged the most in 6 years. First weekly gains in 11 weeks, ending the longest losing streak since 1986. US crude rallied $3.96 yesterday, biggest one-day percentage gain since March 2009. Brent settled $4.42 higher at $47.56. It's going to be interesting if they can hold on to this gains. I'm not so sure. A short covering rally led by crude oil pushed commodities higher across the board. Better than expected US GDP numbers was the main spark, although the force majeure on BP's exports from Nigeria extended the gains. I like this picture of scenes from a tempura omakase, shrimp tails and heads, Japanese ginger and trigger fish, gogi berries and whiting, seaweed wrapped scallops. Looks tasty. Holger, Russian ruble, strongly bounces back today as Brent crude oil jumps by more than 10%. African stocks lead frontier market loser list as bears take hold. African stocks are losing more money for investors than their frontier market peers as Kenyan and Nigerian equities languish in bear markets on concern slower economic growth will dent corporate earnings. And basically, Africa, as I've been talking for a while, has really been performing very, very poorly. And the stock markets, when you look at African countries and their economies this year, they're under a lot of pressure because of very low commodity prices. That's a fair point. But as I quoted that fellow Samir Gadio, you would have expected the oil consumers to perform better, but we haven't seen that happen. Kenyan equities, for example, have slid for 12 straight days for their longest streak of losses since December 2013, while Nigerian shares are down 21% since their April 2nd peak. And this is the common definition of a bear market. The Nairobi Securities Exchange is going to snap that losing sequence today and finally. And this is the point, right? Somebody's asked him what stocks he likes. Top picks include Guarantee Trust Bank in Nigeria, Zenith Bank Nigeria, Equity Kenya, Kenya Commercial Bank, Safaricom, and Nigerian breweries. You're getting these at 5, 6, or 7-year lows in terms of multiples, and that's an important point as well. Nielsen says, don't lump African consumers in one market. Very interesting. I'd like to read the original report. I haven't got that yet. 80% prioritize spending time with families, 78% value the opinion of women in the household, 77% believe in respect for elders. These were the values that they believe in most. Only 33% prioritize spending time with friends, 36% are the first to try new things, and 39% say friends seek their advice about technology. Growing market of the mobile internet. The key for advertisers is the use of integrated cross-platform campaigns which are critical with messaging for the right audience. Very interesting. South African all-share rallied 1.58% yesterday and it remains 1.295% lower for the year. Dollar rand, when I looked last, was at 13.13. We hit 14, which was my target for a while back, so I'm just sitting back and really think. Low dollar yield, debt yield shields South Africa from weak rand. This is an interesting point. Our debt is mainly rand denominated. Only a very small percentage of our debt is dollar denominated, so it does have an impact, but it's not as bad as it would have been if we were exposed beyond where we are. This is Nene, who's 56. He's under pressure to keep debt under control to ward off the threat of a credit rating downgrade as economic growth slows. His job is being complicated by the rand's plunge to an all-time low of 14.0682 on August 24. Egyptian stock market rallied 2.99%, but it remains down 20.703% year to date. Nigerian shares are down 21% since their April 2nd peak, meeting the common definition of a bear market. The all share is down 18.57% so far this year. The Ghana Stock Exchange Composite Index is down 5.174% this year. Nicolette, who used to run the bureau here for CNBC, tweeted, "Sunset in Maputo, Mozambique," and it looked a beautiful photograph. Kenya, the opposition fallout. This is a report carried in full, and the Afrika Confidential. There's no paywall. It's worth reading because it's quite interesting. Although the government's record on security and economic management looks shakier by the day, its opponents are divided and floundering. Opposition Alliance, the Coalition for Reform and Democracy, holds its political retreat to map out strategy at the beginning of September. Its leaders will struggle to hold together the unwieldy organization. The question likely to haunt CORD activists at the meeting is why the opposition has been so ineffective in winning popular support against a government that has failed to tackle worsening corruption and terrorist attacks. Many of the answers lie in the poor relations and poor communications among the leaders and parties in the alliance. To say there is a massive deficit of trust between the four main leaders is an understatement. So serious is the rivalry at the top that few believe the current alliance will survive in the run-up to the 2017 elections. Effectively, campaigning will start next year. ODM's demand for Odinga to stand against has angered Wetangula and Musyoka camps, partly because Odinga failed to consult them. Since the beginning of August, Odinga has launched his campaign website and started an ODM voters registration drive. And then talking about infighting within the opposition, particularly focusing on the sugar deal. Talking about how mismanagement and corruption caused the collapse of Mumias, which it did, saying that Odinga has consistently attacked Jubilee and its Mount Kenya Kikuyu elites for what it describes as a calculated attempt to impoverish Western Kenya cane farmers. As Odinga describes it, Jubilee's deal involves sacrificing the farmers so the country can sell mainly Kikuyu-produced dairy products to Uganda. Saying it's a rocky month for the opposition, which disappointed its supporters by failing to capitalize on President Obama's trip to Kenya. At a meeting with civic activists at Kenyatta University, Obama made what Kenyans call the hypocrisy comment. He had just come from a hurried 30-minute meeting with the four main opposition leaders. And the funny thing was, I was entering into Kasarani Stadium, where the president was going to speak. And as I came in, Raila, Kalonzo, Martha, and all of them, they'd just spoken with Obama, and they were clearly very upset. And Obama told his audience, it's funny though, one of the opposition leaders I've just met with, I will not mention who, said, we really need you to press the Kenyan government on some issues. And I said, I remember when you were in government, you kept on saying, why are you trying to interfere with Kenyan business? Mind your own business. Laughter followed. Kenyans knew that all four opposition leaders had previously lashed out at the USA and Britain for interfering in Kenyan politics. In fact, most of the civic activists there also wanted him to pressure the Kenyan government. Obama advised him to engage their government instead. The USA, he added, would listen to both the government and its critics. He had just heard Siru Gikonyo, a sister of John Githonga, reel off a list of complaints against Jubilee, ranging from theft of state funds to sabotage and devolution. So, interesting article, well worth reading if you care to have a look. Bamburi Cement, this is interesting, reported first half profit after tax accelerated 85.9%. Well, that's going to go down a treat at the stock exchange. Turnover up 11.7%, profit before tax up 93.6%, earnings per share up 77.4%. Interim dividend, they're paying 6 shillings a share. That's going to go down well as well. Talking of improved market conditions in Kenya and Uganda, strong inland Africa export markets, operating profit due to growth in sales, better external cost environment, and investment income and large foreign exchange gains on dollar-denominated liquid assets. So that's interesting because it indicates that they took a view and they held assets which have paid off. Really strong results, and confirms why the share price has performed quite strongly this year. It's up about 10% in the market. That's absolutely got hammered. BRITAM reported first half profit after tax declined 77.3%. The share price is down as of this morning before the opening 48.23%. Total assets leapt to 76.614 billion. Fund management fees up 6.2%, investment income up 38.8%. Basically very strong organic growth. Group's core business posted tremendous growth, they said. Premium income in the insurance business grew by 82%. Regional business revenue contribution up 708%. That's the acquisition of Real Insurance. Asset base grew 38.9%. The bearish performance of the securities market has negatively impacted on the fair value from financial assets, and it was that impairment which squeezed these profits. Operates in 7 countries, no interim dividend. Tweeted during the earnings release some interesting 39% growth in total assets, 77% growth in gross earned premiums, so very strong organic underlying numbers. And I think the market has looked through that, it's rallying at about 5% today. Liberty Holdings reported first half profit before tax declined 9.3%. Profit after tax down 8.9%, earnings per share down 12.4%. And they too were talking about a reduction in investment income as a result of a significant reduction in mark-to-market values. Well-managed, well-organized franchise, clearly mark-to-market values crimped the first half. Home Africa has reported a first half loss before tax of 111.905 million. Revenue down 60.6%. Other operating income up 365%. Finance costs surged. Profit before tax down 264%. Earnings per share down 450%. They reported a loss of 28 cents a share. They said the group received the anticipated long-term funding of 500 million shillings during Q1. They achieved a significant 50% reduction in administrative overheads. I think this is a counterintuitive trade, actually, well worth getting into. They slashed admin expenses, net asset values some ways north of the trading price, represents, in my view, an interesting entry into the real estate sector, particularly at this price. And I think the business has been right-sized during this reporting period. Standard Kenya, Standard Newspaper, Standard Group, issued a full-year profits warning, specific challenges, business disruptions that resulted from the digital migration process, challenges in our business operating environment, impairment of obsolete company assets, review of all old debt resulted in the decision to increase our bad debt provisions. Company has initiated an organizational restructuring process. This has also resulted in one-off reorganization costs that will be expensed in 2015. Express Kenya issued a full-year profits warning, saying a period of business instability, diversification into the real estate sector, anticipating a loss in its financial report for the period ended 30th June 2015. Kenyan equities slid for 12 straight days, longest losing streak since December 2013. It's going to snap out of it today. Nairobi All Share fell another 1.38% yesterday. It's been a dreadful week. It's down 15.58% year to date and at the 7th of February 2014 low, but it's going to rebound today. NSE 20 down 20.181% year to date, 14th of December 2012 lows. Fell 2.17% yesterday. It's really been a brutal week, but yesterday there were 6 losers for every winning share, but I think it might well prove a catalytic blow-off bottom, which in trader parlance means when you flush everybody out and the market returns much stronger because you've got rid of all the loose longs. And I think the big caps, Safaricom, KCB, EAPL, are set to rebound from what are very, very oversold levels. I won't go through the rest of the market. I'll wish you well and a great weekend. Once again, thank you for stopping by.